Hello everyone and welcome to my channel. If it's your first time here, this is the place where we explore the most relevant movements in the stock market with dynamic charts, making it much easier to understand the evolution of stocks and market trends. Today, I bring you a very interesting analysis about Apple and how its services segment has experienced impressive growth over the past years. As always, the dynamic chart that you will see throughout this video has been created from the data that you will see on the screen, allowing us to clearly visualize how this change has occurred year by year. Apple, the famous company behind products like the iPhone, Mac, iPad, and services like iCloud, has shifted its strategy in recent years to focus more on its services segment. This segment includes everything from music subscriptions, cloud storage, to applications and services related to education. Until recently, most of Apple's earnings came from sales of physical products like the iPhone. But in recent years, we have seen a strong expansion of its services, which has started to represent an increasingly important portion of its revenue. Now, let's look at how this growth has been. According to the data, Apple's services segment grew 13.94% year-over-year and is projected to surpass $100 billion in revenue by fiscal 2025. This is a key piece of information because, as you will see in the chart, this figure shows steady growth that doesn't seem to be slowing down. This growth is remarkable because it is happening in a context where, for example, iPhone sales have stagnated, and the company has suffered a significant drop in China, one of its largest markets. So the question is, how has Apple maintained this growth? The answer lies in its ability to diversify its revenue and its focus on recurring services that are not dependent on hardware sales. Now, let's move on to the dynamic chart that illustrates this entire process. As you can see on the screen, the chart shows the growth of Apple's services segment from 2018 to the 2025 projections. You can notice that starting in 2019, the growth is constant, with a significant peak in 2021, which reflects an accelerated increase in subscriptions and sales within this segment. This type of growth is very interesting because, unlike the fluctuations we can see in the hardware market, services generate recurring revenue, which provides stability to the company. But what's most impressive is that, despite the drop in iPhone sales and tensions in China, Apple has managed to offset that decline with a services segment that is expanding rapidly. As you can see, projections indicate that Apple could be surpassing $100 billion in revenue just from this segment in the next 3 years, which is a clear sign of the transformation that is taking place within the company. This change is relevant not only for investors but for anyone interested in understanding how the largest companies in the world are adapting to a more digital market. Apple realized that it could not rely solely on physical products for long-term growth. That's why it has shifted toward digitization and online services. And if you think about it, this is a more sustainable business model in the long run, as services generate stable, ongoing revenue regardless of fluctuations in device sales. By visualizing these changes with the dynamic chart, we can see how this approach is paying off and how this segment is projected to become increasingly important for Apple in the coming years. To put this into context, how does Apple compare with other major tech companies? If we look at companies like Microsoft, Google, or Amazon, we can see that they all have adopted a very similar business model, focusing on digital services and cloud. In fact, Apple's service revenues, especially in areas like iCloud and Apple Music, are very similar to the revenues generated by cloud services from Amazon Web Services, AWS, or Microsoft Azure. This gives us a clear idea that we are witnessing a shift toward a service economy, and companies like Apple are at the forefront of this trend. One very interesting aspect we must highlight is how the growth of Apple's services segment is also influencing its market valuation. Technology companies, especially those that rely on hardware sales like the iPhone, tend to be perceived as more volatile, as their revenue can be more cyclical. However, when a company generates recurring revenue through services, like Apple does with its subscriptions to Apple Music, iCloud, and Apple TV+, the perception changes. Sustained growth in this sector makes Apple appear as a company with a stable long-term revenue source, which can translate into a higher valuation of its stock. Investors prefer companies that can generate money continuously, not just through sales of products that depend on consumer demand, which is key for financial stability. That's why, many times, Apple's stock value reflects more its success in services than its hardware sales. Apple's business model isn't just about making money with hardware products, but offering users services and platforms that integrate perfectly with those products. With Apple Music, for example, the company is not just selling a streaming service, but also building an ecosystem that makes users continue to use other Apple products like the iPhone, iPad, and Mac. This approach has also been strategic in a world where people are increasingly willing to pay for subscriptions and services that integrate into their daily lives. Apple TV Plus, Apple News Plus, and Apple Arcade are clear examples of how the company has successfully diversified its revenue sources. This shift is crucial because, instead of depending solely on sales of physical devices, Apple now has a constant flow of revenue through subscriptions. In a broader analysis, it is important to understand how the growth of Apple's services is also helping to mitigate economic risks. As we mentioned before, the technology product market is cyclical, influenced by demand for new devices, consumer trends, and, at times, economic crises. However, recurring services are less sensitive to these fluctuations, which gives Apple a better ability to handle times of economic uncertainty. For example, during recessions or periods of economic slowdown, many people still choose to maintain their subscriptions to services they already use, such as Apple Music or iCloud, as they are part of their daily life. This means that Apple can generate revenue despite the decline in sales of products like the iPhone. Thus, the risk associated with reliance on hardware sales is reduced. In summary, the growth of Apple's services segment has not only been impressive but also crucial for the company's long-term financial stability. Through a combination of innovation in services, subscription strategies, and smart diversification, Apple has managed not only to maintain its market position but also adapt to the new demands of the digital world. This model is an excellent example of how a company can evolve to stay relevant and profitable in changing times. If you found this analysis on Apple's growth and how it has shifted its focus towards services interesting, I invite you to watch my latest video, where I explain why Tesla's real business is not in electric car sales. I invite you to join the conversation and discover more about how big companies are transforming their business models. Don't forget to subscribe and activate the bell to receive more content on the stock market and analysis of major economic trends. See you in the next video.